We continue to keep an eye on cryptocurrencies as we close out the week. It's been a pretty strong week for the major cryptocurrencies, even as disputes over new regulation out of DC for digital assets looms over the industry. So how are investors approaching the asset class? Well, Yoni Assia, founder and CEO of trading platform EToro, joins us now. Yoni, great to have you back on the show. And just given the fact that we do have Bitcoin back above 46,000 this week, Ether back above 3,200 as well, even as there is all of this regulatory uncertainty out there, including here in the U.S., as we see that infrastructure bill with that questionable, or I guess I should say very general language around the definition of a broker in the House right now. How do you see it? How do you see this regulation taking shape, and what does it mean for the asset class and for a company such as yours?
But first of all, it's great coming back, and it's great to see crypto coming back as well. Just 2 weeks ago, everybody was asking, are we in crypto winter? I think right now it's very clear we're not in crypto winter. And I think in general, regulations and the recent infrastructure bill dialogue has raised significant awareness around the mainstream adoption of cryptocurrency, which generally is a very good thing. Because eToro is a global company, we have 22 million registered users from 100 different countries. We're able to also see different regulators in different countries and how basically they approach the cryptocurrency industry. In general, obviously, as crypto are getting more mainstream, regulators need to regulate the industries. They need to protect customers. That's their role. I think generally what's important is that we have regulations that really understand the technology and that promote innovation, because we are seeing mind-blowing innovation within the crypto and blockchain industry, and we need to make sure that new regulations don't basically block this industry from progressing to where it needs to progress.
I realize that this is still a moving target right now, but just in terms of what that regulation looks like in the U.S., again, as part of this infrastructure package, does it accomplish that?
I think, again, the original language, there has been a lot of debate around it. There's a lot of misunderstanding, I think, of decentralization. You can't really regulate Bitcoin is Bitcoin, right? Because it's decentralized. By definition, when something is decentralized, it's impossible to regulate it because you can only regulate it centralized entities. So again, there's the gatekeepers, right? The financial institutions, you can regulate that. And obviously what they've been trying to do is to expand the definition to capture potentially software developers, miners, hardware, wallet manufacturers. And I think generally that does hurt innovation. Software developers should develop software. They shouldn't necessarily deal with transaction monitoring or reporting. So I think the definitions there are, and the nuances of how to define it is really what's important. But again, we see this all around the world. Regulators, are trying to do what they think is best. They don't necessarily understand the technology or what is the best way to get to the point.
Yeah, and certainly it's complicated. It's been a really interesting couple of weeks for public investors where cryptocurrencies are concerned, whether it's Robinhood going public and everything we've seen happen in that stock, whether it's Coinbase with earnings earlier this week as well. Volatility still continues to be the word that gets used and is in play for the companies that have any kind of touch or exposure to cryptocurrencies. What are you seeing on your site?
First of all, volatility is probably here to stay. There's no gravity with interest rates being zero. There's no gravity in the market. So we've seen crypto falling down 50% from May to July, and now crypto up 50% from mid-July to now. So I think volatility is here to stay, and everything that's related to crypto by definition will be, sort of a proxy to that volatility. At eToro, every time we see a crypto rally like we're seeing right now, obviously that has a direct impact on the level of customer interest worldwide that are interested in crypto. So retail investors usually react very quickly to price movements, to upward price movements. and they start buying when the markets are starting to go higher.
So Yoni, very quickly, when is your SPAC merger going to close and eToro become public?
As we announced the SPAC bank in March, we said we expected the Q3 closing, and we still believe that's the plan.